bring in now Joe Saluzzi. He is a co-head of equity trading at Themis Trading, and he's been trading stocks for almost 20 years. But today, nothing makes sense to him.
It never does. It seems like, I mean, stock market.
Maybe you should just become a bull.
Well, I'm agnostic. Okay, I am a trader of stocks, and I'm just executing as I see them. But there are two different paths. There's no doubt about it. There's the stock market, right? And then there's everything else. So the strategy nowadays is just don't think.
But
Nobody thinks.
Maybe the underlying fundamentals and the earnings outlook and the valuations make sense to buy.
I have an answer for you on this.
And they can combat everything
But I do think, and in the past you've gotten me on that a lot. But now you have to question earnings this quarter because you're going to hear a lot about the weather. You're going to hear a lot about Japanese supply issues, and you're going to hear a lot about input costs. And we've heard that from General Mills and Nike just recently. These costs are going up. Can these companies pass along these price increases now? That is very questionable, especially in an economy which is still kind of weak.
Weak, but the consumer is unbelievably spend-happy, right? I mean,
are they? Maybe the guys from Wall Street who pop in here with, their Wall Street attitudes are spending at Tiffany's and Saks.
I'm talking middle America. I'm talking University of Michigan people.
Well, they're really not, because their incomes aren't going up. You have not seen wage increases, which is good for inflation when you think about it, right? But you're seeing price increases. So if gas is now $4 a gallon, right, and now you're 5% higher on milk, where did that extra disposable income these people had? It's gone. You can't buy the iPad now.
All right,
oh my God.
We're going to talk more about
it. You can't eat the iPad.
Well, that's
you can
true.
still buy it.
Let's kick it out to a trader at this point. You want to do that?
Another trader.
Another trader. That's right.
John Brady is a senior vice president at MF Global. He's at the CME Group in Chicago. And John, let me get your assessment of the economy here, because Joe makes a lot of good points. It doesn't make sense that people would continue to spend money since they don't have any more money and everything they need is getting more expensive.
No, I think that's a viable argument, but I think over the course of the last 2 weeks or so, we've seen lots of bad news priced into the equity markets. And as Leon Cooperman may have suggested earlier today, if you look at the Fed model that values bonds versus stocks, bonds are either a little bit rich or stocks are a little bit cheap. So as we go into the close here, we are seeing a very positive day by equities. They'll probably take some stops out, some buy stops out behind me, Matt, in the S&P 500 pit between now and 415, right around that 1305, 1305.50 level. But really, the economic data has been a little bit softer the last couple of days, but there was lots of bad news priced in about a week and a half ago coming out of Japan. Portugal ended up being pretty much a non-event in the LIBOR and FX forward space. So really, with so much cash sloshing around the system and in the economy, it goes into risky assets, gold and stocks today.
And Joe, let me ask you, because a couple weeks ago, during the depths of the Japanese crisis, or at least what we've seen so far, and the Middle East turmoil, a lot of people came on here and said, hey, it's a buying opportunity. And I know that you and a lot of the doom and gloom kind of zero hedge guys will make fun of anyone who uses the phrase buying opportunity. It sounds like a ridiculous sham, but it was, right?
It's the BTFD crowd. I won't tell you what the acronym means, but they're out there. Okay, and I think what happens now is that there's a complacency amongst the people who may want to sell because they realize they have the BTFD guys, they've got the Fed, they've got the Bernanke who's going to out there and support them at any chance, so they won't sell. Why would you sell right now when you know these guys got your back? But eventually it's going to happen. They won't be there for whatever reason.
What's the thing that puts everybody over and starts selling?
I don't know if there's going to be a one-day event or it'll be just more of a trickle-down type thing. But, there will be a valuation question eventually. 13.5 PE on $96 earnings if you make 96. And I question that. But I do think one good thing that I heard out of Oracle, increased dividends, lots of cash on the balance sheets. You're going to see that. You're going to see buybacks. You're going to see mergers because they don't know what to do with the cash.
Let me just ask you something. I always wonder, if you know that there's a conspiracy going on here, if you know that it's a rigged game, why not get on board with the casino, right? Because the house always wins.
Every ounce of my body will not allow me to do that. It just won't allow me.
That's why we love you, Joe. All right, hey, Julie, you've been following the situation in Europe all day. Let's switch gears to that. How does that matter to U.S. investors when the game isn't rigged, let's say?
In a word, it doesn't, at least not today. And what I did was go back and look at the S&P 500 over the past year. We now maybe have a third bailout. We've had two already. So if you take a look at the first, Greece, last spring, this is around when it happened. That was when the market was going down. down. And definitely we saw a negative reaction. Remember the backdrop, however, the economic data here in the U.S. was not as strong. At that point, especially in early spring, people were still talking about the lingering talk of a double dip here in the U.S. So that was the backdrop. Then, of course, you started to have the big rally. And when Ireland agreed to its bailout in November, it was sort of a little bit of a blip on the already upward trajectory. And then, of course, today we get the concerns about Portugal, which here in the U.S. weren't concerns at all. They really didn't materialize. And in talking to investors today, they came up with a couple of different theses, if you will, on why it hasn't affected us as much. First of all, perhaps the backdrop is a little bit better, although you still have oil prices going up and you still have the economic data here in the U.S. Mixed somewhat. But other people were saying, you know, we're used to it more now. It's not a new issue. Joe, I'm curious what you think about all of this. I mean, there's also the view that the risk of contagion, the concerns about contagion are now pretty much gone. This is a European issue and not a U.S. one. What do you think?
Nobody cares. That's what I think. It's unbelievable. Nobody cares about anything. You could throw anything at this market, and they really don't care.
But should they care about this particular issue?
Oh, absolutely. I think, you know, Portugal, it's whack-a-mole, right? Every day something new pops up. Tomorrow it'll be Ireland. Then maybe Spain will pop back up again.
But what does it say to you, Joe, about the resiliency of traders out there and investors that despite everything that the world seems to be falling apart, the market's going higher?
They're drug addicts, okay? They want their stimulus fix, and they get their stimulus fix every time there's any little bit of downtrend. The Fed's going to be there, and they're going to support you. Well, one day the junkies get either overdose, or the dealer won't be there to give them that stimulus.
People have started saying QE3 here, in all seriousness.
Of course they are. But I tell you what, one of the guys I follow, Russell Napier out of CLSA, who's been right on spot. He called this last rally. He said that QE2 has been a failure, and to sell equities, okay, in the near term, coming soon. He also said he expects the Fed to come out with another program, but that'll be a failure because confidence is starting to be lost. How many times can they continue to go to the well?
A lot of people say QE2 was a failure, but it doesn't really matter so much to the market, does it?
That's right.
I mean, it's been a failure on Main Street.
That's right.
But it's helping out the guys down on Wall Street.
You're absolutely right.
And you're one of those guys.
No, I'm not. I am so I'm so not Wall Street. We're off Wall Street. We're in New Jersey.
Hey, John Brady, you're out there in the Midwest here. I mean, what about you? Do you think everybody's just kind of shrugging everything off, all the woes around the world?
Well, I think that there is that sense coming out of the events from Japan and, of course, Portugal. I think probably the next canary in the coal mine, Carol, is most likely going to be Italy. And the effects on the Italian economy, given its debt burden and perhaps the slowing of the Italian economy because of effects from the Libyan spillover. So that could be sort of the next macro trade as regards Europe and perhaps a reintroduction of volatility into asset markets. But here and now, the Fed keeps the spigots on. Equities are priced relatively cheap to bonds, and there's really going to be no obvious formal play in terms of the Fed shutting off the credit spigots, and thus risk assets should continue to rise. Is it right that they do because Fed credit is so easy? No, but it's going to happen. And I think trying to fight that trend right here, right now, is going to be a rather challenging trade.
I agree with him. I absolutely agree. You can't fight the trend. Obviously, there's two different paths here, but to fight it, you're going to lose. Look at the volatility. It went from 30 to 18 on the VIX in 1 week. You fight that, you're dead. And this money that is on the corporate balance sheets, it's sitting there. It needs to get to work. The banks, I mean, look at J.P. Morgan loaning $20 billion to AT&T of money that they're borrowing at 0% from their poor depositors who have been getting killed for the last 3 years. How is that fair to Main Street when Wall Street's taking the money?
Canaries, I mean, to use John Brady's analogy, canaries have been dropping dead in the coal mine for a year or longer now, but as long as you're a banker or a big corporation, the Fed will give you an oxygen mask.
And that is what's holding up the market. That's why the complacency amongst the sellers is out there. Why should you sell?
If we took this all away, we took away all of the quantitative easing from the Fed, Joe, what would happen in your view?
I think you would eventually start to see, I don't think it's going to be a one-day event, okay, because they are going to keep coming with programs. They're not going to stop because they know that he's already said he wants to keep the equity market up because he thinks that's going to keep the economy going. That's not going to work because most of the people in America are not invested in the stock market.
Right.
I hate to tell them that. They're just regular people out there trying to make a living, and they're getting hurt by this.
Hey, Joe, what about those regular people you're talking about? I mean, are they out there spending like crazy, as Matt said, because of QE2? That seems, a little counterintuitive.
I don't think they are. And some of the economic numbers you're seeing, look at the durable goods this morning, look at some of these corporate earnings reports, they're not exactly knocking the cover off the ball. And that's telling me that, yeah, maybe Saks and Tiffany's they're spending because that's the high end. But look at Walgreens. They didn't make it the other day either. Walgreens, that's middle America.
John Brady, you sharing all the skepticism of Joe Saluzzi?
Retail skepticism?
I do, and I I'd actually follow up with Joe, and I'd say if you look at inflation-adjusted retail sales the last couple months, they're actually lower. And with a lack of income growth coming from, really a lack of employment growth, the whole idea that inflation-adjusted retail sales are lower suggests that the consumer's not in fabulous shape.
Got it. John Brady, Joe Saluzzi. Guys, thank you so much.
You got it. Thank you.